Well, RJ, you touched upon the team. So, Bill, why don't you talk to us as well about the team that you have built at Lightbox?
Absolutely. The team is a function of track record. And a track record, when I like to share people, how's our track record been? I like to take it to the property level slide. So if I could, the slide that you've got right up on the screen now, this really shows you our development activity. And the takeaway that I asked you to kind of really hearken or direct your eyes to would be that hold period, right? It's 3 years in duration. So I think that's really, really unique in the self-storage or in the entire commercial real estate sector. Typically a development activity in commercial real estate is without a doubt a 5 to 7 year hold. The other part is the compounded annual growth rate, right, at 21% year over year. So you can see, right, we're consistently putting best in breed returns out at the property level. Now, as you mentioned earlier, right, we've been in the fund business quite a while. So we've done 9 fund offerings in this current platform. Many of the first couple were with Protective Life. And the way I like to think about ourselves back then is we were a little mini Blackstone, in that we would identify an opportunity that was innovative and that we could go out and exploit in the marketplace. So first we were doing distressed power centers, distressed big box centers, and changing those from B's to A's. Then we started doing open air fashion centers, big mixed use projects. And then we went into grocery anchored retail. So we played each one of those out. And then our investment thesis with self-storage presented itself. We worked on it for 18 months. And each and every year, we challenge ourselves on that investment thesis with all the stuff that I presented to you today. Can we have a disproportionate risk reward with the capital we're putting at work in a manner that we can generate a recurring return profile, right? Everybody doesn't want to, nobody wants a one-hit wonder. Can you walk that walk, talk that talk year over year? And as such, that's what's led us to, the retail channel. So we've done 4 or 5 funds in the retail channel and the self-storage arena, raising money through folks like yourself at Legacy Wealth. And our mandate, again, I mentioned this earlier, is raise quick, sell quick, return quick, right? We don't store your money. We want to have these small niche sharpshooter funds where we're raising capital over a 12-month duration. We're immediately putting it to work. We've got all these assets already identified, and we want to exit as quick as the market will give us. If we can continue to find high barrier to entry locations, we humbly believe that we'll be able to exit a heck of a lot faster. So there's that element. And then, give me, Bill, the Cliff Notes version. And this is probably it. If you look at kind of our performance goals that we have for any fund, we want to try to return your capital as we go. And so historically, we've returned a good bit of capital over the first 2.5 to 3 years. Equity multiple is 1.4 to 1.8, right? That's under the conventional Lightbox methodology, though. I'll warn you, right? We've now got New York Life and Protective Life that we are bringing to that table. And then duration. We want to be able to stay as short a duration as possible, again, to be a risk mitigant against volatility. So how does all that come about? So it comes about through the proper team, right? And as everybody that runs a business and understands a business, when you are in a position where you realize that you've got a mousetrap that is repeating in nature and that can withstand headwinds or tailwinds, that can withstand down cycles, up cycles, it really starts to sound like, right, a jazz band. And what I'm most excited about right now is that our group has really got a good rhythm in terms of being able to find compelling opportunities and put ourselves in a position where those compelling opportunities are executable at standards that we hold them to. Our group is the royal blue that's on this slide, kind of where we're located. But the meat of our development and acquisition deal making is really Philadelphia all the way down around to Dallas. And so we've got about 9 individuals that are out there finding opportunities for us that are always trying to load that pipeline. And what's interesting about that slide is that that's a lot of people to find 12 deals, right? Because that's the typical size of our fund. We don't have to go out and find 100 different opportunities. We're only finding 12 or 15 to populate, if you will, a Lightbox fund. And so we've got a lot of people. You can see how many stones we turn over in order to find that rare opportunity. It takes that many people, but we want to really find that unique anomaly with a compelling return profile before we want to pull the trigger.